tax moves that the wealthy are making right now, or at least wealthy retirees. This is, of course, the retirement solution. So we want to know what we want to be like minds, like people, right? Like environments. And also, I think that I'm the kind of person where surround me with smarter people, surround me with richer people, because let me see what they're doing. It's a trickle down effect, is it not, John? Like,
It's funny. I was talking to someone the other day, and they're like,
yeah,
John, what do you do, in your downtime? And I kind of laughed a little bit because even if I'm not working or all that other kind
I
of stuff, I
know.
got kids, right? We're doing all of the soccer in different states on the weekends and stuff
Yeah,
like
you are.
that. But I laughed because I was like, I have spent the last decade basically being the dumbest person in nearly any major business room I've been in. That's just one of those things. So when you say you like to be surrounded by smart people, I have purposefully worked my butt off to get into the room of the people that are true billionaires. They own, Major League Baseball franchises and professional football franchises, and they are absolute, just the top of the top. And what I have found is they do things differently
Yep.
than you and me.
Yep.
A tremendous amount of what they do is really simple. They just understand the rules better than most
Yep.
of us, right? So
Yep.
over the years, what I've found is that has been a real thing for me. I want to be the dumbest person in that room because then it's like osmosis. I
Yeah.
just suck it in, and hopefully, the more I hear it, the more I think about it, the more I can just exude that, right? And
Yep.
that's one of those things that I think when it comes to retirement, most of us don't sit around thinking about, hey, what's it like to let's go hang around a bunch of retirees. Hey, I don't know how much shuffleboard and pickleball you want to get into any given day, or the 4 o'clock lunch buffet. But the idea is, or 4 o'clock dinner buffet.
I was about to
But
say.
the idea is like, how do you surround yourself with the smart people that make retirement really look attractive, right? And I'll tell you one thing. We're going to get into a completely different section here, but it's about purpose.
Okay.
People that have purpose, they have passion in the things they're doing on a day-to-day basis,
Mhm.
they absolutely succeed in retirement. Now, if they make the financial proper steps to go that direction, it's even better. It's even
Mhm.
better because then they're putting all of that passion and that fun that they want to do, but they're combining that with really smart investment decisions. And it doesn't mean they get scads and scads of money like these billionaires. They're just making really good choices for different phases of their life. And man, it ends up being a completely different ball game. But
Okay.
those are the people that I've been hanging with.
Well, let's learn. Let's learn from the ones who seem to be doing it better, at least according to this article,
Sure.
because the Wall Street Journal did a publication talking about it. The headline was literally Retire Richer. Tax smart moves wealthy retirees are making right now.
Absolutely.
And that's what I want to dive in with you on this conversation, John,
Yeah.
because we talk on the podcast, we talk on the radio program ad nauseum about the fear that so many of us have about where we're headed as a country with our debt.
Sure.
How are they going to pay that off? My 401k is untaxed money, or other IRA opportunities, untaxed money. They're coming for us.
Absolutely.
How can I do better? What can I do now? So I wanted to ask you to go through this list with us,
Yeah. Yeah.
clarify what you believe is worth us knowing about to implement, and how at J. Hagan Capital you can help us.
Absolutely. So one of the biggest things that I have learned over the years is that taxes are without question the single most important thing for how you go from a millionaire to be a billionaire. It is impossible. It is impossible to get to be a billionaire if you keep paying taxes on the first 10 million because you're going to give half of it away. And then you've only got 5 million. To have real unbelievable compounding wealth, you have to do it with tax efficiency. And yet every single day, your average, what they used to call the middle class millionaire, the guy that's got $2 to $7 million, and it
Mhm.
seems like, oh my gosh, that's so much money. You'd be surprised how many of you are out there. I see you every single week. And the amazing thing is the tax side of things is so important to how that works. Whether you're selling your business, whether you're selling a strip mall, whether you're repositioning your real estate, or you're going to a tax-free state like Tennessee or Florida or Texas, it is a big deal. When do you take those exits? But the things that I see most people missing all the time are the simple things, right?
Okay.
Just using the current tax laws and going and jumping up to the top part of their bracket, their current marginal income tax bracket. And that's number one. People talk about Roth conversions all the time. People over every single financial station talk about Roth conversions all the time. And yet, when I look at them, most of them are unbelievably inefficient. They are not using bracket bumping techniques to bump that client to the top of that bracket that they're in or the most favorable. Believe it or not, staying in the lowest bracket is not the best way to do Roth conversions. Now, if you're a millionaire already, guys, it gets even that much more explosive. You get to utilize the concepts for Roth conversions that the billionaires use, because billionaires don't hardly have any money in IRAs or Roths, almost none. Why? Because you can only put away a small amount of money each year. To be billions, these guys are selling businesses or doing real estate transactions or negotiating these huge deals. And so they all have to wonder every single day, hey, if I do this, is my taxability, is my tax equivalent yield great? So they're looking for all those alternatives. So whether you have a ton of money already in Roth, the main thing is that what you can do is find out, should you still do Roth conversions or should you find the Roth on steroids? Contact our office. That's one of the best things that we can teach you. You have to be a multimillionaire to start with in order to be able to utilize it. That's not a joke. That's just how the rules are written. Don't get mad about it. Just understand, if you can do that, take advantage of it, right? So that's number one. Number two, people are not getting the tax harvesting right? So tax harvesting means that you own things that you still want to keep owning. But if you make a very judicious sale of that asset, you can buy it back a little bit later and you can actually write that loss right off your taxes. Now, amazingly, what I see all the time is tax loss harvesting, but most people don't know that you can harvest tax gains and potentially pay a much lower tax bill on those gains. People aren't even aware of that. Like, hold on, what are you talking about, John? Yeah, if you're in the bottom two tax brackets in the United States, every dollar that you would have paid in capital gains, you pay not one single penny. Now, why is that? Well, because there is no capital gains rate if you're in the 12% or lower tax bracket. So I see people all the time like, well, I'm not going to sell that UPS stock, John, because I don't know. I don't want to pay the taxes. It's like, well, hold on, aren't you in the 12% tax bracket? That means you have no capital gains rate. There is no tax to be able to do that. Whether you buy it back later at a much lower or a much higher cost basis, which means what? You don't have to pass away to give a step up in basis to someone else. Really smart to consider not only tax loss harvesting, but tax gain harvesting. Huge, right? The big three, so those are the first big two. Now, the third one is really comes down to required minimum distributions. So the government over the last several years have changed things around a little bit. And now we don't have to take the money out at 70 and a half like we used to. Now, most of us don't have to start pulling money out until we're 73, and on the top end, up to even age 75. We may not even have to make a required minimum distribution payment until we're 75 years old. And people are going, well, that sounds great. Well, is it? Because what happens if you have all that money that's been compounding like it has been, and all of a sudden we have a couple great year runs, and all of a sudden that money gets compounded and you don't have to pull it out till 75, but guess what happens? When you have to start pulling out that required minimum distribution, it puts you in the highest marginal tax rate from that year until you're gone. That's exactly right. And by the way, the whole reason you have to pay those tax rates is because the government wants to make some money that it has not made in the past off of you selling those assets and distributing it out. Okay. So here's what I know. You do not get a step up in cost basis for your kids to inherit your IRA. They're going to have to pull that money out, potentially at their much worse tax bracket if they've done real well. If we've done a great job educating our kids, they got real good jobs, they got double incomes, they may actually pay more in taxes than you would on your own money. So understanding how the RMDs work, there are alternative ways to dismantle your IRA correctly and to get that money in tax-free positions where you can eliminate or at least really reduce that RMD so that you're not in that highest marginal tax rate. But believe it or not, most of us, if we've saved more than $3 million in those IRA accounts or 401ks, that's when we basically start triggering the 37 to higher percent tax rates. And guys, I know I've said it 100,000 times on the show. I know that people hear it all the time, but the government is broke. The government has no money. They need to use our money. They're going to collect it from those of us that have saved really, really well. And they may end up taking 37 to 40 to 50% of what we've saved if we don't plan for this kind of stuff, right? Because I don't care what anyone says. If we don't have a balanced budget, these current tax cuts that I'm really excited about right now, they will not stay in play. They will have to go away, and who knows how much worse they get. But there is bipartisan support, which means Republican and Democrat support on doing means testing and things like that. So the better we've done, the more means we have, the more taxation we're either going to have, or the more they're going to reduce our amount of Social Security or the cost of living adjustments on Social Security. So those are things we really want to plan for, because my fear is we've only got 3 years left of this current tax legislation. 3 years. So for this current administration, and after that, all bets are off, right?
Right.
So those are the biggest things that we can consider. Other things that we need to know about, though, is qualified charitable distributions, right? So if you're going to give money to a charity when you're in retirement, think about doing it sometimes heaped in 1 or 2 years so you can take advantage of the current tax structure, right? That means instead of giving them $5,000 a year every single year, you do a qualified distribution. It counts towards your RMD, but you may actually do $15,000 or $20,000 one time, and that's going to pay you up for the next 3 or 4 or 5 years. Why would we do that? It can be really, really smart if you have other expenses that you know are going to happen down the road. So qualified charitable deductions for your distribution for your RMDs, I think is tremendously important.
All right. Quickly, ensure that we are taking advantage of tax brackets
Yes.
for Roth conversion opportunities.
Bracket bumping is one of the best things we can do. Bump up to the next tax bracket if it's going to be advantageous to your situation.
All right. Tax loss and gain harvesting.
Absolutely.
So
based on your current tax bracket, you may actually pay zero capital gains, which makes all the sense in the world to do capital gains harvesting, which almost no one talks about.
Okay. And then also having RMD strategies. Quickly, and I know we could have a whole another conversation about this, but let's just quickly touch on the idea of a business owner getting ready to sell a business for a large sum of money.
Absolutely.
There are also strategies there that we need to factor in. This might not have been part of this original article, but I wanted to ask you about it because as you're a business owner yourself, things you got to consider.
That's one of the most attractive things about this new OBA, One Big Beautiful Bill Act. The way that they've done it, we have all kinds of alternatives now to basically completely eliminate some current taxation on the sale of a business, or at least defer it until much later in the future. Those are unbelievable. To not have to think about paying any taxes at that moment in time that you sell your business until you find what else you might want to invest in is one of the greatest things we've seen. There was a gentleman that came in, $5 million business sale. He's not going to pay a single dollar in tax for at least the next 3 to 4 years, and we get to control that. We're going to save the guy almost $780,000 simply by understanding trust and accounting frameworks for business sales. These are things that we deal with every single day, and these are the ways that the new tax legislation we're taking advantage for people that are basically millionaires and want to maintain that millionaire status.
Yeah. When it comes to taxes, a lot of us have concerns. Uncle Sam may or may not have a plan right now, but he's surely coming up with one. And you don't have to just stand there and take whatever he gives you. You can take advantage of opportunities now. John and his team at J. Hagan Capital here to show you what the rules are and where you can work in that space. Of course, everything is done above the book and wanting to be honest and legal. That's goals for all of us. But also, none of us want to have to pay $1 more in taxes than they already have or that we need to. At J. Hagan Capital, they're here to show you what strategies you can implement to keep more of your money where it belongs, in your pocket. Let's start the conversation. Visit us at retirementsolutionshow.com. We also have links posted in the show notes to help you get to work on a tax strategy for your retirement. Doing it like the wealthy do. Visit us at retirementsolutionshow.com.